British stocks are continuing to face tough times, with the FTSE 100 index struggling to gain traction. But here's where it gets interesting. While investors grapple with uncertainty, one major company has quietly achieved a significant milestone that could reshape its future, and perhaps even the healthcare industry as a whole. GlaxoSmithKline, GSK, the pharmaceutical giant, has just secured regulatory approval for a groundbreaking antibiotic. This development raises some big questions about how innovation can coexist with market volatility. Will this approval be enough to shift investor sentiment? And how will it impact the broader perception of British equities in these challenging times? Let's zoom out for a moment. The FTSE 100, which tracks the performance of the UK's largest publicly traded companies, is currently hovering around 9,215 points. Over the past 5 days, it has dipped by nearly 1%, and since the start of the year, gains stand at 12.77%. While this yearly increase might seem positive on paper, recent downward pressure from sectors like technology and utilities has cast a shadow over what could have been a more optimistic outlook. For instance, tech stocks have been particularly volatile due to global economic concerns, while utility shares have faced headwinds amid rising energy costs. These factors combined make it clear why British equities are extending their losses despite pockets of good news. Now, let's talk about GSK's achievement. The company's newly approved antibiotic represents a major step forward in addressing antibiotic resistance, a growing global health crisis. Antibiotic resistance occurs when bacteria evolve in ways that render existing treatments ineffective, posing a serious threat to public health worldwide. By gaining approval for this drug, GSK isn't just bolstering its product portfolio, it's also positioning itself as a leader in tackling one of medicine's most pressing challenges. This move could attract renewed interest from institutional investors who prioritize long-term value creation over short-term fluctuations. But here's the part most people miss. The implications of GSK's success stretch far beyond its balance sheet. In an era where environmental, social, and governance (ESG) considerations are increasingly influencing investment decisions, breakthroughs in healthcare carry added weight. Investors aren't just looking for profits. They want to back companies making meaningful contributions to society. Could GSK's new antibiotic serve as a catalyst for rethinking how we evaluate pharmaceutical firms? Some argue that traditional metrics may no longer suffice in capturing the full picture of a company's potential impact. Of course, not everyone agrees on the significance of this approval. Skeptics might point out that developing a new drug is only half the battle. Ensuring widespread adoption and affordability remains a daunting challenge. Others might question whether GSK's efforts will translate into tangible benefits for shareholders anytime soon. Is this breakthrough truly transformative, or is it being overhyped in the context of current market conditions? As we look ahead, all eyes remain fixed on key data releases from the United States, which often serve as a barometer for global markets. With so many variables at play, predicting the next move for British equities feels like trying to solve a puzzle with missing pieces. Yet, amidst the uncertainty, opportunities may arise for those willing to take a closer look. What do you think? Does GSK's latest win signal a turning point for UK stocks? Or is it merely a bright spot in an otherwise gloomy landscape? Share your thoughts in the comments below. We'd love to hear your perspective.